our other favorite topic. You know what it's going to be? Bitcoin.
Bitcoin.
5 years from now, what's it worth?
If we're right and companies continue to diversify their cash into something like Bitcoin, and institutional investors start allocating 5% of their funds towards, I'll just say Bitcoin for right now, because we did that, we framed it for Bitcoin, could be for other cryptos as well. We believe that the price will be tenfold of where it is today. So instead of 45,000, over 500,000.
Do regulators, especially US regulators, need to buy into this in a major way? I would also say that we just saw it in the last week. Brian Armstrong runs Coinbase. You have a stake in Coinbase, has now gotten into a somewhat bitter feud with the SEC over how the ability to offer effectively a yield product on some of these cryptocurrencies, specifically Bitcoin, will work.
Yes. I think regulators, our working assumption from the beginning was that, and this was based on meeting with them, meeting regulators, both state and local and federal, was that no regulator wanted to be blamed from preventing the next big technology breakthrough to happen in the US. And that has proven true. Now we've got Chairman Gary Gensler. I'm really happy he understands crypto and understands the merits of Bitcoin in particular. He is a regulator though, and he's a hardcore regulator. What Coinbase did, I mean, I was shocked when I saw Wells notice. Are you kidding? They haven't even released the product. Like, what is this? And I think what that Wells notice is doing, it's a call out by regulators saying, we got to discuss this stuff because this is happening very quickly. And I think we are going to bring courts into the system. This happened in Canada. A company called 3iQ sued the regulator there and won in court. So they were able to issue Bitcoin ETFs and closed-end funds and Ether as well. So I am beginning to think that Coinbase doesn't mind this at all. And if you saw the stock reaction, it hardly budged. Right. So 5-year investment time horizon, our minimum hurdle rate of return is 15% at a compound annual rate over 5 years. And so I think that that combination of 5 years plus exponential growth trajectories is what is finally starting to get into the market. I've been waiting for years. It's going to be incredibly confusing, I think, to people. Just look at what's happened to the bond market this year. You know, against all expectations, yields have dropped from, I think it was 1.75 at the peak in March down to 1.3 as inflation expectations are exploding, right? We believe the reason for that is that we're probably, when all is said and done and the dust clears from the supply chain problems and everything, we're probably in a highly deflationary world. And we see 3 sources of deflation. One is very good. It's called technologically enabled innovation. Artificial intelligence training costs are dropping 68% per year.
Right.
When a cost drops that much, the demand for it picks up, and artificial intelligence is probably the biggest reason we're seeing the convergences between and among technologies. So we've got one S-curve feeding another, explosive energy, incredible deflation. That's the first deflation. If the whole world thinks that's going to happen, and a portfolio manager and analyst team thinks that's going to happen, well, if we're wrong, it's not going to matter that much, right? Because nobody's expecting it. It's not in the market. But if we're right, the returns are enormous. And I think that's what's going on with the technologically enabled innovation that we see, especially in healthcare, by the way. But there are 2 other sources of deflation. Disruptive innovation, there's another side to it. It's called creative destruction. And I think we're going to see more creative destruction than we have in all history during the next 5 to 10 years. Now, you can say, oh, you're just talking your book. We have rights law teaching us about learning curves and cost declines that suggest we are going to see incredible booms out there in parts of the world, but it's going to mean tremendous destruction in others. So when I say confusing, I mean that. And then the third source of deflation, I think, will be cyclical deflation. Most people are fighting us on this one. It's hard to fight us given our research on those other two. We're in the echo now. And I do believe that both crypto and the equity markets are going to be powered by millennials. In fact, Tom Lee at FinStrat, yeah, he has done the arithmetic the way that Stan did. And I think he says this bull market will not end at least until 2026, and maybe not until 2038 when the number of millennials peaks out there. If we're right, and companies continue to diversify their cash into something like Bitcoin, and institutional investors start allocating 5% of their funds towards, I'll just say Bitcoin for right now, because we did that, we framed it for Bitcoin, could be for other cryptos as well. We believe that the price will be tenfold of where it is today. So instead of 45,000, over 500,000. Countries are now deeming it legal tender, and we haven't even put that into our thinking. Ether, however, is seeing an explosion in developer activity thanks to NFTs and DeFi. I'm fascinated with what's going on in DeFi, which is collapsing the cost of the infrastructure for financial services in a way that I know that the traditional financial industry does not appreciate right now. So it does have to move from proof of work to proof of stake. That transition is underway and seems to be taking hold. Our confidence in Ether has gone up dramatically as we've seen the beginning of this transition from proof of work to proof of stake. We'd still probably do 60% Bitcoin, 40% Ether. Our working assumption from the beginning was that, and this was based on meeting with them, meeting regulators, both state and local and federal, was that no regulator wanted to be blamed from preventing the next big technology breakthrough to happen in the US. And that has proven true. Now we've got Chairman Gary Gensler. I'm really happy he understands crypto and understands the merits of Bitcoin in particular. He is a regulator though, and he's a hardcore regulator. What Coinbase did, I mean, I was shocked when I saw Wells notice. Are you kidding? They haven't even released the product. Like, what is this? And I think what that Wells notice is doing, it's a call out by regulators saying, we got to discuss this stuff because this is happening very quickly. And I think we are going to bring courts into the system. This happened in Canada. A company called 3iQ sued the regulator there and won in court. So they were able to issue Bitcoin ETFs and closed-end funds, and Ether as well. So I am beginning to think that Coinbase doesn't mind this at all. And if you saw the stock reaction, it hardly budged.
Do you still think that's where we're headed?
We do. I do. Yassine El-Mandra is our crypto analyst, and we go through soul-searching times like this and scrape the models, and yes, our conviction is as high. The one thing that has changed here, however, is the environmental concerns around Bitcoin in particular have caused people like Elon Musk to pull away and say, whoa, 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 let me make sure I understand this. And we believe that even this is going to change because, first of all, right now, the percentage of Bitcoin mined with renewables and hydroelectric power is quite substantial. I think in China, it's over 50% in renewables. And we also believe, and we wrote a paper in conjunction with Square on this, and we're going to have a conference about it in July. We believe that Bitcoin mining integrated into the distributed grid, and by that I mean solar roofs, power walls in homes, utilities, merchant power producers, starting to include Bitcoin mining in the ecosystem. Why would they do that? They would do it because renewables are intermittent power sources, right? Weather, is it sunny or not? Wind, is it windy or not? And Bitcoin mining could take off if there's excess energy from solar being loaded into power walls. It can be offloaded into Bitcoin mining, and the whole ecosystem, therefore, becomes much more economic. If this happens, we believe that the adoption of solar is going to accelerate dramatically because there's another profit center associated with it, Bitcoin mining.
Well, what happens though in the meantime? So here we are at 35,000, Cathie. Do you think we go much lower from here?
You never know how low is low when a market gets very emotional. A lot of traders see Bitcoin dropping below the 200-day moving average, which was at 40,000. So traders, once that happened, they just dump. Some just dump and run. I think we're in a capitulation phase. Yassine has a dashboard. We were looking at all the indicators this morning. They are all suggesting that we are in the capitulation phase, which is a really great time to buy, no matter what the asset is. A capitulation phase is buy. It's on sale. Now, am I saying 35,000 is the low? You know, if traders, and there are a lot of speculators in Bitcoin, if they are running for the hills just because Bitcoin has broken through a moving average that is important to them, it could continue. But all of our indicators are saying this is capitulation right now.
Do you have a low point on your model for Bitcoin?
No, these metrics are more a measure. Are we in a truly capitulation phase?
Okay.
And it's very detailed. Yassine uses on-chain analysis, which this is the only asset where you can see exactly who's doing what, when, why, and how. And all of those metrics are saying this is a capitulation. This is as bad as it got during the coronavirus crisis.
We are on the threshold of an explosion in innovation, and crypto is symptomatic of it. The seeds for what is about to happen were planted during the 20 years that ended with the tech and telecom bubble. Those seeds have been gestating for 20 to 25 years, sometimes 30 years, and are now beginning to blossom. And that's not even the right word. They are exploding into existence. So we think there are 5 major platforms, 14 different technologies that are all getting ready to move into the sweet spot of their S-curves. And there are going to be convergences between and among these technologies. So you're going to have one S-curve feeding another, and creating explosive energy and explosive growth. And I think in the crypto space, we're going to see blockchain technology and artificial intelligence converge, cause explosive reactions. So it's pretty exciting. Just to get back to investing in the future, when I was trying to explain to someone what I wanted to do before starting ARK, and who's not in our business, he said to me, "Oh, you mean that in the future of investing is investing in the future?" And I said, "You got it." Well, now, when I started in the business, that's the only way people thought about investing. And then we went through the tech and telecom bust, and then the 08-09 meltdown, and we ended up with huge risk aversion in the markets and a tendency to invest very much like the broad-based indices out there. In other words, not adding much more value than the indices themselves. And the indices are where they are
Because of what has happened historically. The largest companies, the most heavily weighted companies in these indices are there because of their past success. But if we're right, and all of this disruptive innovation is about to explode, well, they are in harm's way. We've been evolving our point of view on Ether. When we started our analysis, we were pretty much, and this was with Chris, Bitcoin was what we needed to understand first, but we were keeping our eye on all of the other assets, and we stuck pretty closely to the thesis, the FAT protocol thesis that Chris's partner Joel Monegro came up with at Union Square Ventures. Which says that the value accrual will take place more at the currency level. And we believe there would be only a few currencies in the world, much like there are today. We thought Bitcoin would be the reserve currency, and we were looking for the other currencies. And Ether was showing up as a very strong second. And I have been surprised at how Ether and the Ethereum network is mushrooming with stable coins, NFTs, decentralized finance. It's clearly satisfying a huge unmet need. One of those needs is yield out there. And we see that in the fixed income markets, the ridiculous rallies that have taken place, taking junk bond yields down to, just a couple of 100 basis points above treasuries. That's kind of nuts. So this hunger for yield is being satisfied by a much more efficient financial ecosystem. And I think many more people are more open-minded to it as well. Let's see, one of the things that has struck me from the beginning, and when Chris started at ARC, which was very close to the beginning of the firm, I remember saying very early on, follow the developers, follow the developers. Well, that metric, Ethereum is off the charts, whereas Bitcoin is steady as she goes, still increasing, steady as she goes, but clearly Ethereum, decentralized finance, NFTs, have hit a responsive chord. I think bringing the creator community into this ecosystem is, helping it go a little bit viral more quickly than we would have expected. My experience in innovation is when you're onto something early, there are bound to be problems, and when it blows up is when you invest. That's when you really think about the investing. And I'll say, just in terms of Ether and the NFTs and the creator community, I was listening to one of Placeholder's calls, and they featured the CEO of Async Art. And I had never heard async art. I had never heard about this phenomenon at all. He starts speaking, and I'm on a walk, and I am smiling from ear to ear. I have not smiled that wide a smile since I first heard of the internet. Banks are beginning to see how much this is going to hollow them out. I think part of the heightened regulatory talk here in the United States and elsewhere, but it's really taken off in the last few months here, is because what you are talking about, the yield, has attracted so much interest that the banks themselves are beginning to feel it. I have been shocked. I listened to especially JP Morgan's call. It's a good kind of staple to understand what's going on in the banking industry. And, in a V-shaped recovery, Jamie Dimon was telling us that their loan growth would be negative through the end of this year. I said, what? And I began to think, could it be? Could what's going on in the Ethereum world already be impacting banks. You know, prices are determined at the margin. And so this could be really hurting the banks. And I think I'm going to take a very close look during the next few earnings seasons to see if we can dimension it. It doesn't seem like it is big enough yet, but I'm beginning to wonder, the search for yield, which again, the extremes, the bond market in the traditional world, I believe is in a bubble, certainly on the corporate credit side, which is where the risk is. And I can't help but believe that others believe the same and are searching elsewhere for yield. My aha moment was after Chris had really written the paper, could Bitcoin serve the role of money? We're just working from a very basic level. And we were talking about a $6 billion market cap at the time, or network value, as we were calling it. And we had Art Laffer take a look at this paper. And he looked at it and helped us. We wanted it to be absolutely correct from an economic point of view. He looked at it and he looked up and he said, wow. He said, this is what I've been looking for all my life. This is a rules-based monetary policy, a global rules-based monetary policy. And I ended up saying, oh, okay, well, if that's true, how big could this become? And he said, well, how big is the US monetary base? And at that time it was $4.5 trillion. Now it's $8 trillion, because he was dimensioning it as though it would be the reserve currency, a reserve currency out there. So so a global rules-based monetary system, hugely important for humanity, I believe. And I share Art's view. I was educated by him, so that's not surprising. But and then I think the idea, again, Chris wrote the book. We're dealing here with a new asset class, also for investors, unlike anything we've seen before, and unlocking huge productivity and creating inclusion like we've never seen before globally. So I think, and decentralized finance is just mushrooming as we see. So, it's going viral.
Our other favorite topic, you know what it's going to be? Bitcoin.
Bitcoin.
5 years from now, what's it worth?
If we're right and companies continue to diversify their cash into something like Bitcoin, and institutional investors start allocating 5% of their funds towards, I'll just say Bitcoin for right now, because we did that, we framed it for Bitcoin, could be for other cryptos as well. We believe that the price will be tenfold of where it is today. So instead of 45,000, over 500,000.
Do regulators, especially U.S. regulators, need to buy into this in a major way? I would also say that we just saw it in the last week. Brian Armstrong runs Coinbase. You have a stake in Coinbase, has now gotten into a somewhat bitter feud with the SEC over how the ability to offer effectively a yield product on some of these cryptocurrencies, specifically Bitcoin, will work.
Yes. I think regulators, our working assumption from the beginning was that, and this was based on meeting with them, meeting regulators, both state and local and federal, was that no regulator wanted to be blamed from preventing the next big technology breakthrough to happen in the US. And that has proven true. Now we've got Chairman Gary Gensler. I'm really happy he understands crypto and understands the merits of Bitcoin in particular. He is a regulator, though, and he's a hardcore regulator. What Coinbase did, I mean, I was shocked when I saw Wells notice. Are you kidding? They haven't even released the product. Like, what is this? And I think what that Wells notice is doing, it's a call out by regulators saying, we got to discuss this stuff because this is happening very quickly. We think deflation is the greater risk. The fear will shift from inflation or stagflation to deflation and or recession. And we think crypto prices, a new asset class, will continue to move up. We think deflation is the greater risk. And I know that's not a very widely held point of view. In fact, I don't think I know anyone who has that point of view. But you've heard some of the cyclical dynamics that we think will take inflation down. And we think secular dynamics will as well. Good deflation, that associated with disruptive innovation. And the statistic, I'm not sure if I mentioned it on the last call, but that, blows my mind is artificial intelligence training costs are dropping 68% per year. Think about that. That's massive deflation. That's a huge undertow. And then the other side of disruptive innovation is creative destruction. So those companies who manufactured earnings by leveraging up to buy back their shares are probably didn't invest enough in innovation and are going to see the results, we think, during the next few years. They will have to service their debt by cutting prices. Once these uncertainties are out there and it's clarified, there's an inventory correction, China's hitting economic growth, then I think inflation and interest rates are going to come down fairly dramatically. And the fear will shift from inflation or stagflation to deflation and or recession. And we will revert to very low nominal GDP growth rates, probably 2 to 3% range. In that context, our average revenue growth for our strategies is north of 25%. And I think the market will wake up once again to revenue growth rates that are 10 times that of the economy. So we're looking forward to that. And we think crypto prices, a new asset class, will continue to move up. It's very interesting to watch El Salvador. El Salvador has deemed Bitcoin legal tender, and its president tweets almost every day about this initiative. So far, 2.7 million out of the roughly 4 million eligible have downloaded their Chivo wallets with $30 worth of Bitcoin in it. What's interesting about that 2.7 million is only 1.2 million people in this country of 6 or 7 million people have checking accounts. So here's another example of DeFi, not even letting banks penetrate that highly into a country like El Salvador. It's also interesting to learn that today or in this week sometime, the government started mining Bitcoin using energy from its volcano. And we're wondering if they're going to actually include Bitcoin in their reserves, which we think would be a very smart thing to do. And the reason it would be smart is we're beginning to see the dollar's strength hitting emerging markets. a lot of emerging markets have dollar-denominated debt. So when the dollar goes up, it takes that much more to service the debt from converting from their currencies into dollars. So this is often a harbinger of risk increasing in emerging markets. And very often there will be runs on the currency, and as their populations try to shift into dollars. So El Salvador is not going to have that problem this time. And we think other emerging markets are going to start taking its example. So ISS, which is a proxy solicitation firm, and it's owned by Deutsche Börse, which I didn't remember until I started digging a little bit. We are beginning to see the banks worrying about loan growth because of DeFi, decentralized finance, and the crypto world. And we do believe there is a lot of reason to worry. Regulators are going to insinuate themselves into that process, of course, and we'll see what happens. But DeFi is flying. Just to give you a sense of that, last year around this time, there was less than $10 billion locked in DeFi on the Ethereum network. Today, that is $120 billion. So at the margin, that is making a difference for the banks. Why are we positive on crypto, especially Bitcoin, which is mathematically metered to top out at 21 million units? We're somewhere between 18.5 and 19, I think now. And yes, that's if there were an inflation, that's a beautiful hedge. But when you're talking about emerging markets or you're talking about a situation like 08-09 here in the United States, when there's a crisis, counterparty risk is high and rising. So to have a backstop like Bitcoin, we think is an excellent insurance policy.